right. So one other thing you want to keep in mind is to know that you can't be a growth investor and a value investor at the same time. So they're a contrary style of investing. The growth investors don't want to see a stock come down. They don't believe that when the price actually falls, they should be investing. They feel if the price is falling, they need to get out of that stock. Growth investors tend to look for companies that are growing at a fast rate, stock price that are growing. Value investor, like Warren Buffett, for example, they like to buy when the stock prices fall. So as the stock prices is coming down, they want to buy more. Granted that the company and the value of the stock and the value of the company is undervalued. So as long as that is true, they feel like it's almost like you're going on a shopping spree and you're finding a sale with a big discount. And because of that discount, you're going to go ahead and take in as much as you can buy because you know you can sell it at a higher price. That's value investing. But what happens is when you're following whoever you're following on YouTube or any other gurus that you're following, you have to understand that if one person is telling you to buy and the other is telling you to sell, this is precisely why. They have a completely different way of methods of when you should buy and when you should sell. So you can understand that if one is buying on fundamental, other one is buying on technical analysis, the entry points are different. If one is buying when the stock price is coming down, while the other one is like, I'm capping out, I'm keeping my profits, and I'm going to sell the security right here before it tumbles down. Those are the difference. So if you can't do both at the same time, right? You can't buy as the stock is falling and at the same time sell because you don't want to have any loss. Either you have a stop loss method, which is very similar to one would do in a growth investing. You have a stock that's going up and you don't want the stock to fall and you're going to sell out. You're going to cap out and say, hey, I'm going to keep my profits and I'm out of here. Growth investing, value investing, the stock is falling. I'm getting a great bargain because the company, what I'm buying it at, is worth a lot more than what I just purchased it at. Therefore, I can sell it later at a higher price when other people realize that that company is actually worth a lot more than what I had paid for. So these are contradictory to each other. And if you're a novice investor and you're trying to invest and you're getting advice from somebody who's a growth investor and then advice from somebody who's a value investor, you'll be all over the place and you would not know when to buy and when to sell. And this creates a lot of haphazard trading. So what you have to do is you have to pick a style, or at least be cognizant that these are two separate styles of investing. And if you're doing value investing, then you want to get a great bargain.